Picture this. It is a Tuesday morning. You are running late for work. You stop at a gas station to fill your car. You tap your debit card on the pump. Declined. You think it is a machine error. You walk inside. You hand the card to the cashier. She swipes it. Declined again. You pull out your phone. You open your banking app. And for a moment, you think the screen has glitched, because the number where your life savings used to be says 0. Not low, not overdrawn. 0. You call the bank. You wait on hold for 31 minutes. When a human finally picks up, she reads you a scripted sentence in a completely flat voice. Your account has been flagged for a federal compliance review. We are unable to provide further details at this time. You ask when your money will be released. She says she does not know. You ask what you did wrong. She says she cannot say. You ask to speak to a supervisor. She says one is not available, and the line goes quiet. This happened to a man who had lived in this country for 11 years, who had never missed a tax filing, who had a mortgage, a credit score of 740, and 2 children in public school. He was not a suspect. He was not a criminal. He was not even under investigation. He was the primary account holder. And that was enough. He had done something 3 weeks earlier that millions of immigrant families do every single day. He added his cousin to his bank account. My name is Saqib, and this channel, Lawful Immigrant Shield, exists because the United States government is not going to send you a warning before it dismantles your financial life. I track the federal regulatory changes, the FinCEN directives, the IRS data pipelines, and the banking compliance algorithms that are being used right now in 2026 to trap legal immigrants who are doing absolutely nothing wrong except trying to help their families. Today, I am going to show you a trap that is legal, invisible, and already active in millions of immigrant households across this country, including possibly yours. By the time this video ends, you are going to understand exactly how this trap works at a federal level. You are going to recognize whether you are already inside it, and you are going to have 3 precise, legally grounded strategies to protect yourself. Stay with me. Every word of this matters. Let me describe the exact moment this trap is set. Your cousin arrives. He has a valid legal status, a visitor visa, a dependent visa, a newly issued work authorization. He has a passport, a suitcase, and your phone number. He cannot open his own bank account easily because most major banks require a social security number for verification, and his SSN is still processing through the system. So you do what makes complete, logical, loving sense. You go to your bank. You add him as a joint account holder. He gets a debit card. He can buy groceries. He can pay rent. He feels less helpless. You feel like the family member you are supposed to be. You have just made the most consequential financial mistake of your immigrant life. Not because you are wrong for wanting to help him, but because the bank did not explain to you what joint account ownership actually means under U.S. federal law. The teller smiled. She printed the form. She collected the signatures. She did not say, "Before you sign this, let me explain how this changes your legal liability profile and your federal surveillance exposure." She did not say that because it is not her job to protect you. It is her job to process the form. So let me do what she did not. Under U.S. banking law and the Uniform Commercial Code, a joint bank account creates joint and several liability. This does not mean you are sharing money. It means you are merging legal financial identities. Every dollar in that account belongs simultaneously, 100%, to each of you. But far more critically, every compliance flag, every government report, every suspicious activity alert, and every federal investigation triggered by either person's behavior on that account becomes the full legal exposure of both. The algorithm does not split responsibility. It does not say, "This was the cousin's fault." It sees one account generating alerts, and the primary account holder's social security number, your SSN, is the anchor identity. You are the target. And here is what makes 2026 specifically more dangerous than any prior year. Banks are no longer relying on human compliance officers reviewing transactions manually. They run continuous automated behavioral analysis on every account, assigning risk scores based on transaction frequency, cash to electronic ratio, international transfer patterns, and critically, the risk profile of every individual linked to the account. When your cousin, who has a thin credit file, no SSN-linked history, possibly a passport from a country under U.S. sanctions monitoring, and potentially a name that phonetically resembles a name on an OFAC screening list, becomes a joint holder on your account, your risk score changes instantly. Not over time, instantly. The moment his profile is linked to yours, the algorithm begins watching. Before I show you how this trap escalates, I want to give you one diagnostic question. One question that tells you immediately whether you are inside this trap right now. Here it is. If your bank froze your account tomorrow morning, and a federal investigator asked you to explain every transaction made on that account in the last 90 days, could you explain every single one of them? Not generally, specifically, with documentation. If the answer is yes, you are protected. If the answer is no, or even maybe, then what I am about to tell you is not theoretical. It is urgent. Your cousin starts working. Because he is waiting for his work authorization documents, he takes cash work, restaurant kitchen, construction site, house cleaning. At the end of his first week, he has $1,400 in cash. He deposits it into your joint account for safekeeping. The following week, he deposits $1,750. The week after, $1,600. He is being responsible. He is protecting his earnings. He trusts the banking system because you told him it was safe. He just triggered a federal reporting machine, and neither of you will ever be told it happened. Under the Bank Secrecy Act, codified in Title 31 of the United States Code, every financial institution in America is legally required to report suspicious financial activity to FinCEN, the Financial Crimes Enforcement Network, a bureau of the U.S. Department of the Treasury. These reports are called Suspicious Activity Reports, SARs. Most people believe there is a large dollar threshold before a bank must report anything, something like $10,000. That belief is dangerously wrong. The $10,000 threshold applies specifically to currency transaction reports, a different filing triggered automatically by any single cash transaction above that amount. A suspicious activity report has no minimum dollar threshold. A compliance officer can file a SAR on a $200 deposit if the behavioral pattern appears suspicious, and multiple smaller cash deposits made in a short period by a profile with no established financial history into an account that previously had no cash activity. That pattern has a name in banking compliance. It is called layering behavior. It is one of the primary red flags the algorithm is trained to detect. The compliance officer reviews the flag. He does not know your cousin is a kitchen worker saving his wages. He sees a risk profile generating unexplained cash inflows. He files the SAR. And now, because of a provision that makes this trap truly invisible, under 31 U.S.C. Section 5318G2, the bank is federally prohibited from telling you a SAR has been filed, not just restricted, not just policy, criminally prohibited. Any bank employee who notifies you, even hints at it, faces federal criminal prosecution. You have no right to know, no right to respond, no right to provide context, no way to stop what comes next. Now, before you panic, I want you to know something. A SAR filing alone does not mean your account will be frozen. Millions of SARs are filed every year. Most of them sit in the FinCEN database and go no further. The danger is not the first SAR. The danger is what happens when the system sees a pattern. When one SAR becomes two. When two SARs become a cross-referenced profile. When a cross-referenced profile triggers a data pipeline that connects your bank to the IRS to immigration enforcement. That is what I am going to show you next. And that is why every single step in this chain matters. 2 months pass. Your cousin has saved some money. He sends $2,100 to his mother back home through Western Union. He is being a good son. He just filed the second federal report of his stay in America. On November 28, 2025, FinCEN issued a formal alert directing money service businesses to apply heightened scrutiny to cross-border transfers, particularly those originating from cash source funds, from senders with thin financial profiles, and in amounts that FinCEN's own guidance identified as beginning at $2,000. This does not mean every $2,000 transfer triggers a SAR automatically. What it means is that your cousin, with his cash deposits, his thin credit file, and his newly arrived profile, fits every single risk indicator in that directive. For him, the $2,000 threshold is not theoretical. It is the exact profile the directive was written for. Western Union files a SAR. And because the $2,100 originated from your joint account, because your financial identities are legally merged, that SAR is cross-referenced against your Social Security number. It is permanently attached to your profile in the FinCEN database. You did not send money abroad, but the federal database now says that money connected to your account traveled internationally under suspicious circumstances. You are a 2-SAR account, and that changes everything. What I am about to describe is not speculation. It is not a theory. It is documented in federal court filings, reported by the New York Times, the Washington Post, and the Associated Press, and confirmed through official government statements. On April 7, 2025, the United States Treasury Department and the Department of Homeland Security signed a formal data sharing agreement. Under this agreement, Immigration and Customs Enforcement, ICE, gained the ability to submit names to the Internal Revenue Service. The IRS then cross-references those names against its taxpayer records and returns confirmed identity information, home addresses, employer names, and declared income data directly to immigration enforcement agents. This agreement was challenged in federal court. The court filings are public record. In the first known batch processed under this agreement, ICE submitted a request covering over 1 million taxpayer names. The IRS confirmed and returned verified data on tens of thousands of individuals, people who had committed no crime other than existing in a federal tax database. Now let me show you exactly how this applies to your account, step by step. In 2024, a federal court filing documented a case where a lawful permanent residence account was referred to Homeland Security investigations after FinCEN cross-referenced 2 SAR filings with IRS income records. The resident was not charged, but his account was frozen for 4 months, while investigators resolved a $3,200 discrepancy between his declared income and his account activity, a discrepancy that belonged entirely to a family member on his joint account. Now picture yourself in that position. Your cousin deposits cash. SAR number 1 is filed. Your cousin sends money home. SAR number 2 is filed. FinCEN's system now sees a pattern. Your account has generated 2 suspicious activity reports. Your SSN is the anchor identity. Your name enters an ICE sweep request submitted to the IRS. The IRS responds. It confirms your identity, your home address, your employer, your declared income. A federal analyst now has 2 data sources side by side. On one side, your declared salary. On the other side, your bank account, showing recurring unexplained cash deposits and an international wire transfer. The analyst does not know those transactions belong to your cousin. There is no field in the federal database that says joint account holder, newly arrived family member. There is only your SSN, your account, your discrepancy. Your file is forwarded to Homeland Security investigations. 3 weeks later, there are 2 federal agents at your door at 7:15 in the morning. Before your children have eaten breakfast, before your first cup of coffee. They are not there to listen. They have a file. The file has your name on it. You were trying to help your family. The system sees suspicious cash movement, international transfers, and an income discrepancy. That is what it acts on. Let me tell you about the most efficient financial weapon in the U.S. government's enforcement arsenal. It does not require your arrest. It does not require a criminal charge. It does not require a trial. It does not require proof beyond a reasonable doubt. It is called civil asset forfeiture. Under this framework, the government files a civil lawsuit, not against you, but against your money. The case caption literally reads, United States of America versus $47,000 in United States currency. Your money is the legal defendant. You are just the person who used to own it. Remember your cousin's deposits, $1,400, then $1,750, then $1,600. To any reasonable person, that is a working man depositing his weekly wages. To a federal investigator applying the structuring statute, 31 U.S.C. Section 5324, that pattern looks like deliberate fragmentation of larger amounts specifically to avoid the $10,000 currency transaction report threshold. That is the federal crime of structuring. Penalty, up to 5 years in federal prison and a $250,000 fine. And here is the provision that has destroyed thousands of innocent lives. You do not have to know you are committing it. Your cousin had no idea that depositing weekly earnings in amounts under $10,000 could be interpreted as criminal evasion. But ignorance is not a legal defense under this statute. The government only needs to show the pattern could constitute structuring. Then the burden shifts. You must prove your innocence in civil court. This is documented. A business owner deposited his own legally earned cash in amounts under $10,000, simply because that was the natural rhythm of his business. Federal agents arrived unannounced. His entire account, over $150,000, was seized without a single criminal charge. He had done nothing wrong. A dairy farmer's wife made regular cash deposits on advice from her own bank teller, who had incorrectly told her to keep deposits under $10,000 to reduce paperwork. The federal government seized $62,936. They were farmers who trusted bad advice. Now apply this to your situation. If your cousin's deposits trigger a structuring review on your joint account, the government can seize your entire balance, your children's college fund, your house down payment, your emergency reserve, your retirement, gone, without a criminal charge, without an opportunity to explain yourself before the seizure. Then the legal nightmare begins. Average cost to fight a federal asset forfeiture case, $15,000 to $25,000. Average time to resolution, 8 to 14 months. During those months, you have zero access to any funds. Your mortgage bounces. Your landlord starts eviction. Your car loan defaults. Your credit score, built over a decade, collapses in 30 days. Your children watch you dismantle the life you built for them. Not because you were a criminal, because you loved your family and nobody explained how a joint bank account works under U.S. federal law. Helping your family is not a crime. It is not a red flag. The trap is not your fault. But now that you know it exists, avoiding it is your responsibility. Here are 3 strategies that create a legally defensible firewall between your financial life and your family member's risk profile. These are not workarounds. These are the correct, documented, legal methods. Never, under any circumstances, add a newly arrived family member to your personal checking or savings account. If your cousin needs his rent paid, you pay it directly. Keep your account in your name alone, under your SSN with your established profile intact. Pay his specific documented expenses directly from your account to verified vendors. His rent is $1,400. Bank transfer directly to his landlord. His phone bill is $85. Pay the carrier directly online. His electricity is $120. Pay the utility company directly. Why is this legally bulletproof? Electronic transfers from a verified established bank account to a legitimate identifiable vendor generate no suspicious activity reports and no currency transaction reports. The compliance system is triggered almost entirely by cash movement and unexplained deposit patterns. When every transaction is electronic, transparent, and directed toward verified recipients, you create a paper trail that requires no explanation. Any compliance officer who reviews it sees exactly what it is: a verified resident paying documented expenses for a family member. Legal, clean. Your SSN stays pristine. Your family member needs their own banking identity, their own account. Zero link to your Social Security number. This is entirely possible even without an SSN. Several major U.S. banks and most credit unions will open a basic checking account for a foreign national using a valid foreign passport, a consular identification card or national ID, and proof of a U.S. address, a signed lease, a utility bill, or a letter confirming residence. Bank of America's Safe Balance account and several credit unions with ITIN-based programs specifically serve individuals without SSNs. Research which institutions in your area offer this. Drive your family member there. Help them organize their documents. Translate if necessary. Advocate for them if a teller incorrectly insists an SSN is required, because in many cases, that is simply not true. But when the account is opened, it must be a sole ownership account in their name only. Not yours, not joint, sole. Once that account exists, you can electronically transfer funds from your account into theirs. If they later trigger a compliance flag, the investigation begins and ends with their account, their profile. Your life savings remain behind a legal wall the algorithm cannot breach. You helped your family. You kept yourself protected. Both things are true at the same time. If you must use a joint account for shared household expenses with a spouse or a long-term partner, then the only safe version is one where both parties have an established, verified, clean U.S. financial identity, their own SSN, a credit history spanning at least 2 to 3 years, verified income, and no prior compliance flags. The compliance algorithm evaluates both SSNs attached to a joint account simultaneously. When it sees 2 established, verified, multi-year financial histories, it assigns a stable, low-risk score. The moment you introduce an unverified profile, a new arrival with no credit history, no SSN activity, no prior U.S. banking record, you shatter that stability signal. You introduce exactly the anomaly the system is designed to escalate. The rule is simple. Joint accounts only with established, verified, documented U.S. financial identities. If the person does not meet that standard, they do not go on your account. They get their own. That is not a judgment about their character. That is how you remain financially capable of helping them for years to come. Here is what you do today, not tomorrow. First, open your banking app right now. If any joint account holder does not have a multi-year, clean U.S. financial profile, call your bank this week and begin converting to sole ownership. Second, help your newly arrived family member open their own sole account. Bank of America Safe Balance, a local credit union with ITIN programs, any institution that accepts a passport and a lease. Go with them, translate for them, but keep your name off it. That is it. 2 steps. Do them before you sleep tonight. Subscribe for the next alert, because FinCEN's regulatory calendar does not wait for you to be ready. And leave a comment below. Tell me your situation. I read every one. You did not cross an ocean, learn a new language, and rebuild your entire life from zero, to lose it over a bank form that nobody explained to you. Now someone has. Stay protected.